Hello, it is the 27th of April, 2011, and welcome to the Silver Log. It is a little after 10 o'clock in the morning Eastern Time, and at 12:30 today, the Federal Reserve will have their FOMC minutes. Now, for what's going to be said, I personally don't care. I pretty much know the old horse and pony show and would expect the same thing to continue. Now, generally speaking, what happens is the movements just go wild. Instead of having 1% moves, you have 2, 3% moves. Or instead of having 10-cent moves, it's 30-cent moves. And it should start pretty instantly. And the time that I have seen that it begins is at 12:30 p.m. Eastern, 9:30 a.m. Pacific. So it could have already been done. By the time you watch it, maybe it's going on right now. I don't know. But it's going to create some wild, wild movements. And what's a little concerning is that it's already been wild. Because if you get into situations where you're in a very, very low, volatile moving period, and the Federal Reserve comes out and speaks, it's not all that volatile, but still more wild. And when it's been wild as it has been over the last few days, I would expect things to really pick up. All right, and the second point that I want to go over is that of stocks, mining stocks, SLV, AGQ, you name it. I often get asked, "Oh, what stocks do you recommend?" And unfortunately, I can't recommend a single one. And we'll use SLV for example because when you're ready to sell the SLV, there's really only one way of doing so, and that's for the exchange of digital fiat debt notes. Where when you're playing the physical market, you can take paper debt notes, you can take gold, palladium, copper. Maybe you want to get a truck out of it. Maybe you want to get a furniture or some furniture. It's a good barter tool. Where SLV and all the other ones, not so easy. And then you get the problematics of possible bank runs and all that sort of deal. That's the type of mess that I would not want to get into. All right, now on to the analysis. There isn't too much to go over, but I want to go over pretty much the basics. After establishing this low after the major selling, we've had two resistance hits now at an area where former support has become that of resistance. The reddish looking line is that of the 5-day moving average. When you broke through this line and the Fibonacci level, it met up right at this 5-day moving average. It found a bounce, didn't bounce for too much, and it didn't find support here, or at least not instantly, but it did manage to keep the low, which is roughly at around 44 and 2/3. It got above that level, didn't find support. Now we're in a spot where it looks like we're going above and below the 5-day moving average. You can pretty much make the same case now for the blue line, which is the one that shows neutrality or indecision. Overall, it's in a range-bound market. The range is 44, 66, 67. We'll say 44 and 2/3 up to about 46 and a dime or so, around 46.10. Therefore, on a break of the resistance level, the significant area would be the area where it traded in here, which is 47 and 2/3 area. And then if you break down below the support line, it looks like we're heading down towards the previous resistance, which is the Fibonacci line in here. This Fibonacci line represents the 61.8% down retracement from the lows of around $40 per ounce and these highs of close to $50 per ounce. For the rally, which in this case begun at the 40 level, to stay valid, it needs to hold this level or it would become that of a failed move. Now, for this market to become an intermediate term bear market, What I like to use as an indicator for the intermediate trend is the 5-day moving average. When you're rising like this and you're above the 5-day moving average, you're in a bull market. When the reverse polarity is true and the 5-day moving average is declining, you're trading below it, you are in an intermediate term bear market. So now we're at a spot where the 5-day moving average is starting to flatten out. Yes, it is rising, therefore I would call this market neutral. And a break below this level would make the 5-day moving average start to head lower. Thank you everybody for watching this, and I'll try to get some footage of the price movements on the Federal Reserve meeting, because like I say, I'm expecting it to get wild when it happens. Now, to what direction that it goes, I have absolutely no idea as of now. Take care.